Tired of confusing charts? Today we're diving deep into the MACD indicator, the convergence, the divergence, the what? I'll break down exactly what it is, the signals you can use, and even a bonus trick I use myself. Ready to master the MACD? Let's go! Hello friends, this is Rookie Riches. Today, we have an indicator, so to speak, according to your requests. MACD, and it will probably be especially easy to remind its men, which literally translates as convergence, divergence of moving averages, convergence, collapse. You know what I'm saying, don't you? What am I implying? I'm going to tell you what it is, fundamentally. And I'll show you the signals you can use to work with it. So let's add, this is a chart of Bitcoin to the dollar. Let's add the MACD indicator to this chart. I'm going to call it MACD. I'm used to it. If we add anything, I hit slash. This is what the MACD indicator looks like. Let me reveal it. I press the button twice, the left mouse button, quickly, as if I were opening a file and transforming it a little bit for myself. I go here to Settings, Format, Histogram. I will present this one not as a histogram, but as columns. And I'll make the MACD line a little bit fatter. Well, maybe even like this. It will be more beautiful like this, although I'll even put the bars in purple. Okay, what is the MACD indicator? So, look, on the chart, on the price chart of Bitcoin to the dollar, I'm including two moving lines. These are both exponential moving, with periods 12 is fast and 26 is slow. The slow one is bold, the fast one is thin. The meaning of the indicator. I put a vertical line at the points where the fast moving crosses the slow moving, and from top to bottom, and from bottom to top. For example, I'll put these 3 points, mirror them on the MACD indicator. So let's just copy through Control like this and see what we got. And what we got is this. What we have on the MACD indicator is a certain signal line, which passes through 0. I will put a 0 to make it clearer. It goes like this. The yellow 0 A line and the MACD line, where we have it going through 0, either from the bottom up or from the top down. Well, that's basically it. 2 options, no others. And what does it mean if the MACD line goes through the 0 range, through the equator, I call it that, bottom up? It means that a fast-moving average of 12 crosses a slow-moving average of 26. And the mirror situation is reversed. And the fast-moving average with a period of 12 crosses the slow-moving average from top to bottom. For example, at this point we have the MACD signal line crossing from top to bottom, again through the equator. This will be the first signal to use the MACD indicator. Probably, many of you are familiar in principle with the theory of moving averages, but if you are not, you will get acquainted. And the first signal is the crossing of the fast mover by the slow mover. That is, on the MACD indicator, it is displayed as the crossing of the blue line of its equator. The first signal is great. That is, theoretically, we open a long position after crossing 0 and open a short position after crossing 0 as well, but only from top to bottom. We have dealt with the first signal very well. I would like to make a small remark. The MACD indicator was originally invented by its author for exponential moving averages, but some people invented to use it on wider time frames and for simple moving averages, not exponential. This feature is also available here in the MACD indicator on TradingView charts. What do we need for this? We go to the MACD indicator settings, again in the input section, and check the simple MA oscillator box. Click OK, and we see that our green vertical lines no longer coincide with the places where the MACD line crosses the equator. This is because we have changed the method of MACD representation from exponential to simple. To do this, we need to remove 2 exponential moving from the chart and add 2 simple moving with the same period of 12 and 26. And let's make vertical lines on the new crossover, but their color will not be green, but for example, white, let it be. Here was the intersection from bottom to top, here from top to bottom, and for example, here too from bottom to top. Accordingly, we make an analog on MACD, and look, now everything matches. On the white vertical lines, the MACD line crosses its equator. There you go. So we either use the first signal on daily charts on some long periods, or we use MACD on a standard period 1226 on exponential moving averages, right? Everything that I just told you was the point of the MACD indicator as it was originally conceived. So it's just the convergence, the divergence of moving averages. Let's move on. The second signal is the so-called crossing of the signal line. This line is orange. What does it represent? The orange line is an additional smoothing of already smoothed prices on the Bitcoin price charts. That's a pun. That is, we take the moving average of the difference, moving average between the short and long period, that is, between what is basically the MACD indicator. We smooth it additionally. That is, by default, the author initially came up with period 9 of additional smoothing. Accordingly, and the signal number 2, to buy and to sell, we will look like the crossing of the MACD line of its signal line, for example, in this point. Now from the bottom to the top, so this is a long position here, and so from top to bottom, this is a position to open short, to short. This is signal number 2. What do these bars or the histogram represent as it is shown to us initially? The data, the bars, or the histogram represent the strength, the current strength of the bulls or the bears. That is, they actually represent the extent to which the blue MACD line is moving away from its own signal line. That is, the more we move away from it, the higher the indicators will be, the higher the bars on the chart will be in a bullish trend, and similarly, the lower they will be in a bearish downward trend. Bearish. So, in simple words, this histogram, or in my case, the columns, they represent the current strength of the market. Yes, how strong are the bulls, or how strong are the bears? I mean, clearly here in this area, you can see the strength of the bears. In this area, you can see the strength of the bulls. And here, for example, is the area of uncertainty, the rectangular formation. Here, for example, the bulls are fighting with the bears. And we open a deal, respectively, on the side that will win in this fight. I would like to make a certain note at once. The fact that this MACD indicator has a linear representation is an advanced version of the originally invented MACD indicator, because initially it had only a histogram and a signal line. The histogram was this blue line, that is the MACD line itself. It did not represent the strength of bulls or bears. And later we invented a linear representation that we will represent the MACD with a line. And the difference between our signal line and the MACD line, we will represent in the form of a histogram. I hope I've explained it clearly. I realize that it's complicated, but everything seems to fit together in my head. So the second signal looks like this, right? Remember the crossing of the MACD line with its moving line, moving average. The third signal, which works great on the MACD indicator, is divergence and convergence. Right away, I show an example of where they were. For example, they were right here. This is a great divergence, which gives us a signal to open a short position. The price is going up. The indicator is falling, a clear discrepancy, and we go down. That's great. And the mirror situation is convergence. Bullish convergence. Price is falling and the indicator is rising. In most situations, the price follows the indicator, which we saw later on. Accordingly, the third signal is the opening, or more precisely, it is the divergence and convergence between the MACD indicator and the price. It goes like this. These are three classic signals that were invented by its author. From myself, I want to add one more signal. These are the so-called saucers. It is best to look for saucers not on the daily Bitcoin candlesticks, but on the 4-hour candlesticks, i.e., or on the 4-hour chart. There they are much more pronounced, for example. That is, the classic saucer is that we have the first bar, the second one is below the first one. I am talking about the histogram, in this case, the columns. And the third one above the second one forms a saucer. That is, we open a long position. Here we take 100 pips up. I hope it is clear. Let's also look at some saucers. Let's see if we can find something interesting. Well, on 4H. In fact, very many saucer positions just on alts. On the bit, they are not drawn so often. Either you need to reduce the MACD range. But since we are now considering only the classical variant, let's look at these saucers like this. Here are good saucers. Here's a great one. It's perfect, almost 1, 2, 3, second below the first, third above the second. We open long here is 6,400 and go to the moon. Everything is wonderful. Similar mirror situation works with the saucer on the bearish trend to open short positions. Well, I will not look on Bitcoin. They are rare. On the hourly chart, I also do not want to move now to save time in the video. This is the fourth signal from me. Works in most cases, especially on alts. Also good is divergence and convergence. Personally, I use the MACD indicator only as a confirmation to open long or short positions. That is, for me, the criterion is if the line of the blue MACD itself is above the equator to open long positions. Well, I look, of course, at the crossover of the signal lines, at the strength of the bears, at the columns, or rather, at the strength of the bulls and the columns. But for me, it mostly serves as a justification of a rising trend. And I also use it in conjunction with the MACD indicator, where I use graphical figures, lines, channels, using levels. Well, in principle, everything. And I will tell you right away that it is rather stupid to open trades using only one MACD indicator. Either you open them on some long periods, for example, on a 4-hour chart with a period of 2 lines, for example, 3489, enter a deal once in 4-6 months. Well, 3-6 months. And you're more likely to take a profit. Or you open trades on 4H charts on December 26th and every now and then close on stops because, as you can see, false signals for breakouts are quite a lot. On the daily ones, they're smaller, but even in uncertainty positions, you'll have them flickering, right? In principle, that's all. I would also like to add that the MACD indicator is an improved version of the wonderful oscillator, which I consider to be a wonderful oscillator and is a higher priority from my point of view to use. That's all for now. In the future, I have left to parse on the indicators that I personally use on cryptocurrency charts are Stochastic and RSI. And then we will proceed to parse the theory of levels, channels, sloping channels, resistance support lines, and graphical figures. Basically, that's it. I have given you the 3 main signals plus 1 additional signal of my own, explain the principle of the MACD indicator. On the originally invented exponential moving averages, as well as on the additional simple moving averages. If you still have any questions, please ask them in the comments under the video. I will be glad to answer them. That's all for now. Thank you very much for your attention. This is Rookie Riches. See you soon. Bye.